Okay, let's unpack this. Imagine a headline, right?
Right.
One that doesn't just grab attention on Wall Street, but also sends these kind of shockwaves through Washington.
Mm-hmm.
That's precisely the kind of dynamic we're diving into today. Here on the Deep Dive, our mission is pretty simple. We take a stack of your sources, articles, research, maybe our own notes, and we try to pull out the most important bits of knowledge, the key insights.
Right. Cut through the noise.
Exactly.
Go.
Think of it as like your shortcut to being genuinely well-informed, hopefully packed with some surprising facts, maybe just enough humor to keep you hooked.
Yeah.
And what a fascinating topic we have before us today. It sits, well, squarely at this often volatile, sometimes kind of bewildering intersection of corporate titans, the hard numbers of the stock market, and the utterly unpredictable world of political ambition.
It really is a convergence point.
So our central question for this deep dive, I think, is a pretty profound one. How does one individual's, very public political move impact a multi-billion-dollar company and, crucially, its shareholders?
And it's a question that, thanks to our source material today, has some very tangible, very immediate answers.
Absolutely. So what are we working with source-wise?
Indeed. Our core source material for today's deep dive is a highly relevant article. It's titled Musk's Party Plunge, Tesla's Stock Tumbles.
Okay.
And this piece, it really serves as a kind of foundational lens for us to understand the immediate financial ramifications that Tesla experienced, almost in real time.
Right, the cause and effect.
Exactly. So we'll be meticulously examining the underlying concerns of investors that this particular political move seemed to ignite, and how it weaves into this broader kind of evolving political narrative that has really come to surround Elon Musk himself.
It's not just about this one event then.
No, definitely not. Our mission, as always, is to move beyond just the superficial headlines. We want to peel back the layers, really try to grasp the intricate, interconnected web of finance, personal brand, and, well, political ambition that this article lays out so clearly for us. And it's crucial, right, especially with any politically charged content like this, that we approach it with absolute impartiality. Our focus is strictly on reporting what the source states happened, how it was perceived, by the market, by analysts, and the direct consequences.
Not taking sides.
Precisely. Not endorsing or debating any particular political viewpoint. We're here to understand the impact and the context of that impact.
Absolutely. Clarity, comprehension, that's the goal. Not endorsement, not debate. And when we talk about impact, wow, we're not just discussing theoretical shifts, are we? We're talking immediate, very tangible financial aftershocks for Tesla, like right out of the gate.
Yeah, the market did not wait around.
Well, kidding. The market reacted, and it reacted swiftly.
That's a crucial observation. And let's quantify this market reaction immediately, because the figures are quite stark, honestly, kind of breathtaking.
Okay, lay it on us.
Our source reports that shares in Tesla plunged. A significant 7.5% drop in early U.S. trading on a Monday.
7.5%. Okay, that sounds like a lot for a company that big.
It is. And to truly appreciate what a 7.5% drop signifies for a company of Tesla's, well, colossal scale. It's not just a minor blip on the screen,
Right.
It represents this immense, almost unfathomable, immediate loss of value. In real money terms, we're discussing a staggering $76 billion.
Wow, $76 billion.
Yeah, which, for our UK listeners, that translates to roughly 56 billion pounds, wiped clean off the company's market value.
In a single day.
In that single trading day. This isn't just about percentage points. It's about a massive concrete evaporation of wealth.
$76 billion in one day.
Yeah.
That's just an astonishing amount. To truly put that into perspective for you, our listeners, it's not just some abstract number floating around out there. Before this dramatic drop, Tesla's market capitalization, the total value of all its shares, basically what the market thinks the whole company's worth it, so just over $1 trillion.
$1 trillion company.
Yeah. After that single Monday's trading, it plummeted to approximately $940 billion. Think about that. A company worth over $1 trillion sees nearly a tenth of its value just vanish in less than 8 hours of trading.
It's incredible speed.
It is. That's such a rapid, colossal shift, and it powerfully emphasizes just how incredibly sensitive these massive companies are to any kind of news, maybe especially news involving their, charismatic, often controversial, and very public leader. It really highlights the delicate balance of investor confidence, doesn't it?
Absolutely. And that rapid decline carries significant psychological weight, far beyond just the raw numbers. A $76 billion loss in just one day signals this profound market sensitivity to anything that investors perceive as maybe distraction, or an activity outside of the company's core business objectives.
Right, they want focus.
Exactly. Investors, whether they're these huge institutional giants or just individual retail traders, they're constantly assessing and reassessing risk. A drop of this magnitude. It indicates a sudden, sharp increase in the perceived risk associated with investing in Tesla. It triggers a reevaluation. People start asking, is the CEO focused? Is the company's strategic direction stable? This kind of thing can seriously erode investor confidence. It makes them fearful of future volatility, maybe uncertain about the CEO's long-term commitment to the core business.
Yeah, I can see that.
It almost forces them to reconsider the whole Musk premium idea. The concept that his vision uniquely drives value, and maybe question whether that premium now comes with an unacceptably high level of personal risk from his non-business pursuits.
That makes sense. And it wasn't just the company's overall value that took a hit, was it? Elon Musk's personal wealth, which is so tightly tied to Tesla's fortunes, also saw a massive reduction.
Yes, and this is where it gets really interesting, almost paradoxical, as you said.
How so?
Well, his personal stake in Tesla was reduced by nearly $10 billion.
$10 billion. Just his personal stake.
Just his stake, yeah. That lowered it to just below $120 billion. Now, even for the world's richest person, which he consistently is, according to Forbes.
Right. Still number one.
Still number one, with wealth around $400 billion overall. But losing $10 billion in personal value tied to his company in a single day. That's an incredible sum.
It's staggering. For most of us, $10 billion is just. It's an imaginary number. And to see it vanish so quickly, even if you have hundreds of billions more, it must still be jarring, right?
It's an absolutely fascinating juxtaposition, isn't it? While he remains comfortably the world's richest person, which, again, highlights the almost unimaginable scale of wealth at the very top, that $10 billion reduction in his Tesla stake, is this stark, immediate reminder of how intertwined his personal fortune is with the company's day-to-day performance and market perception.
It's not just sitting in a vault somewhere.
Exactly. His wealth isn't just in a static bank account. A huge portion of it is incredibly liquid, tied directly to the public markets. And so it's subject to these immediate, sometimes really dramatic, fluctuations based on events like this one. It paints such a vivid picture of the stakes involved. Even for someone with hundreds of billions, a single day's event, potentially triggered by their own actions, can cause such a colossal fluctuation, directly linked to what they did or said.
Yeah.
It really makes you wonder about the internal calculation, doesn't it? When a personal decision can have such an immediate, multi-billion-dollar impact on your own net worth.
It almost feels like investors are caught in a bind.
Yeah.
Like a damned if you do, damned if you don't kind of situation.
How do you mean?
Well, on one hand, you've got this visionary founder. His focus is the company, his innovation, his drive. That's what made Tesla what it is.
Sure, undeniably.
But then on the other hand, when that same visionary founder makes a move that the market perceives as a distraction or a risk, the financial hit is immediate and massive, not just for the company, but for the person driving it.
I see, yeah.
It suggests a perceived risk, not just to the company's operations maybe, but to the CEO's very core focus and dedication to those operations.
That's a really good point. And that brings us directly to the political catalyst for this whole dramatic market reaction. The source identifies a very specific event, Musk's announcement, the creation of the America Party.
Right. The America Party.
Exactly. And it wasn't just what he announced, but also how and when he did it. That seems important too.
Okay, tell me more about that.
He chose to make this pretty significant political announcement on his X platform, formerly Twitter.
His personal megaphone, basically.
Pretty much, over a weekend, too. So the platform choice, X, is significant because it allows for that direct, unfiltered communication to millions, totally bypassing traditional media channels.
Right, no intermediaries.
And the timing over a weekend meant this major news broke outside of traditional business hours. It sort of caught the market off guard before trading even began on Monday.
So no heads up for the board or investors?
Apparently not. No pre-briefing, no investor relations call, just a direct public statement broadcast to his massive following. And the specific words he used, they were incredibly pointed.
What did he actually say?
He posted, and I'm quoting here, "When it comes to bankrupting our country with waste and graft, we live in a one-party system, not a democracy. Today, the America Party is formed to give you back your freedom."
Wow, that language is Well, it's incredibly strong, isn't it? And highly charged.
Definitely charged.
Framing political action like that bankrupting our country, giving back freedom, coming from a business leader who heads a global corporation. It immediately raises a lot of questions, I think.
Like what, for instance?
Like, how will that resonate with a broad investor base? Investors, regardless of their personal politics, they're primarily concerned with corporate profitability, stability, growth. That's why they invest in.
The bottom line.
Such a bold political stance, particularly one framed in such an, adversarial and highly opinionated way, it could easily be seen as just introducing unnecessary volatility
Yeah.
and potential reputational risk for the company.
Damage the brand, maybe.
Yeah, potentially. It could also signal a shift in the CEO's primary focus, couldn't it? Away from the core business and towards political activism,
Right.
which for many shareholders is simply not what they signed up for when they invested in, a car and tech company.
And that's precisely what experienced analysts picked up on almost immediately. Our source quotes Dan Ives, who's a prominent, widely respected analyst at Wedbush Securities.
Okay, what did Ives say?
He stated quite clearly that Musk's announcement would, quote, alarm investors. His analysis goes much deeper than just that simple statement, though.
Right, and what's fascinating about Ives' perspective, I think, is how it cuts right to the heart of those investor anxieties. He said, and I'm quoting directly from the source here, very simply, Musk diving deeper into politics and now trying to take on the Beltway establishment.
The DC power structure.
Right, is exactly the opposite direction that Tesla investor shareholders want him to take during this crucial period for the Tesla story.
That phrase, crucial period for the Tesla story, that really jumps out, doesn't it?
It really does. What do you think that implies?
Well, it strongly suggests the company is currently at some kind of critical juncture, facing significant challenges, maybe significant opportunities that demand absolute laser-like focus from its leadership.
Like what kind of challenges?
Could be anything, really. Scaling up production of new models like the Cybertruck, navigating that fierce competition, especially from traditional automakers finally getting serious about EVs and those burgeoning Chinese EV companies.
Right, the competition is heating up.
Definitely. Or achieving ambitious profitability targets,
Sure.
maybe overcoming persistent challenges with technologies like full self-driving. At a time like that, any perceived deviation from core business objectives.
Especially into something as inherently divisive as party politics.
Exactly. It can be seen as a direct threat to the company's ability to capitalize on opportunities or overcome those really pressing challenges.
It truly highlights that core tension, doesn't it? The perceived conflict between a CEO's personal political ventures and the incredibly demanding, all-encompassing nature of their main corporate role.
Yeah, it forces investors to ask that fundamental question. Where do you draw the line between a leader's personal life and their professional obligations, especially when that leader is the face, the driving force of the company's whole vision? And for many investors, I've suggested this line wasn't just blurred, it was like unequivocally crossed. They invest in Tesla for its cars, its technology, its future potential, not for its CEO's political aspirations.
And Obbs went even further, didn't he? He noted something about a broader sense of exhaustion among Tesla investors.
Yes, that was another key point he made.
This isn't just about the New America Party then, is it? That word, exhaustion, it implies a history, right? A kind of cumulative sentiment built up over time.
That's exactly how it reads. It suggests this isn't a one-off, isolated reaction to just this single event, but rather it points to a profound weariness, maybe a declining patience, that this pattern of political engagement, which is perceived as a distraction, just continues, unabated.
Like they're thinking, here we go again.
Exactly. It's as if investors feel they've seen this movie before, maybe multiple times. They've witnessed previous instances where Musk's public political interactions, whether it was through his acquisition of X, formerly Twitter, or other controversial statements, seem to create significant headwinds or market volatility for Tesla.
Right, those ripples always reach the stock.
And now they're simply tired of the potential distractions from the core business, tired of the associated market volatility that directly impacts their investment.
Yeah, I can imagine.
And this fatigue, it's amplified precisely because Musk isn't just any CEO. He is the company's largest shareholder.
That's a really crucial point.
It is. This unique position means his personal actions carry immense tangible weight. Any significant move he makes directly affects a substantial portion of the company's value, which means his political forays are far more impactful than perhaps another CEO's might be.
Especially if that CEO is more like a manager, not the visionary founder.
Exactly right. A CEO who's more of a managerial figure executing a strategy, rather than a visionary founder whose personal identity is so deeply, deeply intertwined with the company's very essence.
So the exhaustion stems from feeling like they're constantly navigating risks that aren't really about the cars or the tech.
That seems to be the implication. Risks that aren't fundamentally about the business itself, but about the highly unpredictable public life of its leader.
Mm. And this exhaustion, it ties directly into a shifting political landscape that Musk has been navigating for some time now, which also seems to feed into these broader investor concerns. His relationship with Donald Trump, specifically, has seen some quite significant and public turns, according to our source.
Yes, our source details that. Tesla shares have actually been under pressure for a while, even before this latest announcement, specifically owing to the Tesla CEO's previous relationship with Donald Trump.
Okay, so there's history there.
There is. Initially, Musk's strong support for the then U.S. president created what the source describes as a consumer backlash.
A backlash from customers.
That's what the source states. Now, the article doesn't detail the specific nature of that strong support or the precise impact of the backlash, but the key takeaway for us, for you listening, is that a previous political stance already generated negative repercussions for the company.
So this isn't the first time his politics have affected the company.
Apparently not. And this is a crucial historical point because it vividly illustrates how the political alignment of a CEO, especially one as prominent as Musk, can tangibly impact consumer perception.
Right. People might stop buying the cars.
It could translate into calls for boycotts, maybe negative social media campaigns that damage the brand image, and ultimately that can pressure sales and investor sentiment, which in turn can push down share prices.
It certainly does raise that really pertinent question for any company in the public eye, doesn't it?
Yeah.
How do brands, especially those with such prominent, often polarizing leaders, how do they navigate that inherent risk of alienating big chunks of their customer base?
It's a tightrope walk.
Totally. When your CEO, through their public actions and statements, becomes kind of synonymous with a particular political ideology, you run the very real risk of losing customers who simply don't align with that view.
Oh.
It's complex for any brand, but maybe particularly so for a consumer-facing one like Tesla, where that personal brand deeply informs the corporate identity.
And now this strong support that caused previous backlash has, according to our source, taken an antagonistic turn.
Antagonistic, so they're not aligned anymore.
Seems like quite the opposite. That's a critical new development here. This isn't just a quiet political disagreement. It's apparently become a full-blown public spat between two highly influential figures, both with immense platforms.
Okay.
The source explicitly points out that this antagonistic shift in his relationship with Trump now has investors worried about two distinct yet kind of interconnected things.
What are they?
One, that Musk will be further distracted from his critical day job.
That distraction issue again.
Yep. And two, that the White House could potentially punish his various businesses.
Punish his businesses, like actively go after them.
That seems to be the concern raised. And Trump himself, on Sunday, apparently wasted no time calling Musk's plans to form the America Party ridiculous and launching new, quite personal barbs at, well, the world's richest person.
What kind of barbs?
Yeah.
The language used by Trump is usually pretty direct, right?
It was. Notably direct, personal, and scathing, according to the source. In a post on his Truth Social platform, Trump apparently wrote, "I am saddened to watch Elon Musk go completely off the rails, essentially becoming a train wreck over the past 5 weeks."
Wow, off the rails train wreck. That's not just a critique of a political idea.
No, it's a public, highly personal attack questioning Musk's stability and competence. And such highly public confrontations between figures of this stature, given their respective spheres of influence, could easily escalate further, you'd imagine.
Yeah, definitely.
This escalation significantly increases the perceived risks for Musk's various businesses, not just Tesla. And the mention of Truth Social and X platform, it just underscores the pervasive, immediate, unmediated role of social media in these high-stakes political confrontations. They become instantaneously public and widely amplified to millions.
Right. No filter. And that the second concern you mentioned, the idea that the White House will punish his businesses. That's arguably the most chilling from an investor's perspective, isn't it?
It really is. It goes far beyond just mere distraction and enters the realm of potential political retribution.
Which is a whole different ballgame.
Completely. It raises these profound, frankly unsettling questions about the potential for government entities to maybe target, penalize, or place obstacles in the path of companies whose leaders fall out of favor with powerful political figures.
How might that even happen?
Well, you could imagine things like increased regulatory scrutiny, maybe the loss of government contracts. SpaceX has huge government contracts, for example.
Yeah.
Difficulty securing permits, maybe even direct public condemnation from influential figures that damages public perception.
So real business consequences.
Potentially, yes. This highlights a potentially very blurry and concerning line between business and state, particularly in certain political climates where personal animosity could spill over into policy or regulatory action. This concern adds an entirely new, deeply unpredictable layer of sort of sovereign risk that investors now have to weigh, on top of all the usual market and competitive factors.
Absolutely. It speaks to a deeper dive, really, into investor psychology and the profound, almost singular influence a CEO like Musk wields. This concern about distraction from the day job, it isn't a new one for high-profile CEOs, maybe, but for someone like Musk, it just takes on this magnified importance because of his integral role in the company's innovation and operations.
Let's truly expand on that concept of distraction because it keeps coming up. For a company as innovative, as complex, as globally impactful as Tesla, a CEO's full, unwavering attention is seen by investors as absolutely crucial, almost non-negotiable.
Right. It's not a 9 to 5.
Definitely not. When we talk about a day job for a CEO of Musk's stature, it's not just about, attending board meetings or signing off on reports. It's about overseeing genuinely groundbreaking innovation in EVs, battery technology, artificial intelligence.
Huge, complex areas.
Immense. It involves managing incredibly complex, large-scale global manufacturing processes, forging strategic partnerships, navigating volatile supply chains, guiding the overall vision and direction of multiple major companies under his purview.
Not just Tesla.
Right. And even managing public crises when they erupt. So every minute, every hour, every day spent on, say, political campaigning or public spats is perceived by investors as a minute not spent directly tackling these critical, demanding business challenges.
And this slips right back to that analyst Dan Ives's point about this being a crucial period for the Tesla story.
Exactly.
If the company is indeed at such a pivotal moment, maybe on the cusp of major growth or facing serious new competitive threats, any perceived lack of focus from the very top could have dramatically magnified consequences.
Absolutely. It could impact everything from product development timelines, production targets, market share, and ultimately, the bottom line.
It truly raises an important question that boards and investors must grapple with constantly. What is the acceptable level of non-business related activity for a CEO? Especially when they're so intrinsically linked to the company's identity and future.
It's a tough one.
For most companies, maybe a CEO's personal political views, while possibly known, might not directly crater the stock price. But in cases like Tesla, where the CEO is the brand in so many ways, that line becomes incredibly blurred. It creates this direct conduit between personal actions and market reaction.
And that leads us right to the unique power of a founder CEO's persona, which is really an underlying implicit theme woven throughout all our source material today. It consistently highlights how Musk's personal actions, even things seemingly outside the direct scope of running Tesla, directly impact its valuation and investor sentiment.
Yeah, you can't separate them.
It seems not, and this is a critical insight, one that really distinguishes companies like Tesla.
It is a profound distinction, isn't it? Founder CEOs like Musk are in this almost singular position where their personal brand, their public identity, their individual eccentricities, their often provocative pronouncements, they're all just inextricably linked to the company's identity and market perception. For a vast segment of the public, and indeed for many investors, Tesla, in many ways, is Elon Musk. His vision, his drive, his willingness to challenge norms, these were all central to building the company's initial value and appeal.
True.
Therefore, his personal decisions, even if they're about forming a political party or engaging in public feuds, can have these immediate, undeniable, and financially significant repercussions for the company he leads. It's a direct consequence of that personal brand being so interwoven with the corporate brand. It creates a kind of personal volatility premium that investors just have to account for.
It's such a stark contrast to, say, a company where the CEO is more of a managerial figure.
Like,
Imagine the CEO of a large established manufacturing company or maybe a big retail chain. Their role is typically to execute strategy, oversee operations, manage a team, rather than being the very embodiment of the company's core mission or innovation.
more of a steward than a visionary, perhaps.
Perhaps. In those cases, a CEO's political leanings, while maybe a matter of public interest or personal opinion, would likely have a far less direct, immediate, and dramatic impact on stock performance.
Yeah, you don't expect GE's stock to tank because the CEO joined a book club.
Exactly. No one expects a publicly traded manufacturing company's stock to tumble 7.5% in a single day simply because its CEO decides to support a new political movement. But with Tesla, as our source clearly illustrates, it not only happens, but it also causes billions and billions of dollars to just vanish from the valuation.
And this creates a unique and I imagine significant set of challenges for the board of directors at Tesla and other stakeholders involved.
Huge challenges, I think.
When the primary perceived value driver of a company, that visionary leader, is also, kind of ironically, its most unpredictable element in terms of public behavior, how do you even balance supporting that visionary with effectively mitigating the perceived risks from their personal ventures?
It's a constant inherent tension, isn't it?
Right.
Right there in the company's governance and oversight. How do you harness the genius without getting burned by the unpredictable parts?
Yeah. This deep dive clearly illustrates just how directly those personal ventures can manifest as multi-billion-dollar losses for shareholders. It really forces a crucial conversation about the very nature of modern corporate leadership in an age where public personas are so amplified and scrutinized.
The stakes are incredibly high.
So what does this all mean for us? Wrapping things up a bit. We've seen how quickly a leader's non-business pursuits can just echo right through the stock market, impacting billions of dollars, and raising these fundamental questions about the evolving role, the responsibilities of a CEO in this hyper-connected, often politically charged world we live in. We've unpacked the immediate, significant financial hit to Tesla, the direct link to Musk's political party announcement, the very real concerns of investor distraction, the chilling potential for a political retribution we discussed, and that palpable exhaustion noted by analysts who seem simply weary of these ongoing market-moving distractions.
It's a lot to take in.
It is. It's just a vivid demonstration of how personal actions can have these profound corporate consequences.
What's truly fascinating here, though, and maybe what we hope you'll reflect on after listening, is how this singular event highlights this really intricate, often fraught dance between individual freedom, corporate responsibility, and immediate market reaction.
That's a great way to put it. A dance.
Yeah, this entire situation raises an important and I think very timely question for all of us. In an era where public figures are so transparent, where their every move is amplified instantly by social media to a global audience, how much personal freedom can a titan of industry truly exercise before it fundamentally alters the landscape and the very perception of their professional empire?
Where is that line, or is there even a line anymore?
Exactly. It encourages us to consider the broader implications for leadership, not just for Tesla or Elon Musk, but really for any individual whose public persona is so inextricably tied to a major corporate entity in today's increasingly intertwined world. It's a dynamic tension that we'll undoubtedly see play out again and again in different ways with different leaders. And it really asks us to think hard about where those boundaries truly lie, or perhaps where they should lie.
A really provocative thought to end on. Something for all of us to chew on.
Hopefully.
Thanks for walking us through that. That was illuminating.
My pleasure. Always interesting territory.